From the Business Radio X studios in Woodstock, Georgia, it's time for Cherokee Business Radio.
Welcome back to Cherokee Business Radio. My name is Joshua Kornitsky. I'm a professional implementer of the entrepreneurial operating system, and I'm your host here on Cherokee Business Radio. Before we get started, I've got a great guest today, but I always want to mention the fact that today's episode is brought to you in part by the Community Partner Program, the Business Radio X Main Street Warriors, defending capitalism, promoting small business, and supporting our local community. For more information, please go to mainstreetwarriors.org. And a very special note of thanks to our title sponsor for the Cherokee chapter of Main Street Warriors, Diesel David Inc. Please go check them out at dieseldavid.com. And as I said, I've got a great guest today, Darren Crosby. Darren is the founder of Crosby Business Consultants. His work focuses on helping business owners think differently about capital access, financial structure, and long-term operational resilience. He operates at the intersection of funding strategy and business stability for growing companies. He helps leaders make smarter financial decisions that support growth without increasing personal risk. Welcome. I'm so happy to have you, Darren.
Hey, thanks for having me.
It's a pleasure. So I'm going to jump right in and ask you, what on earth do you mean by supporting growth without increasing personal risk?
No, great question. I've been an entrepreneur for 20 plus years, owned 3 different businesses. And during my time owning those, obviously, I was getting access to capital, be it working capital lines of credit and whatnot, but I always had to sign personal guarantees, and because I just thought that was how it worked.
Sure, isn't it?
And about a year and a half or so ago, I stumbled across this platform where you can build the business credit profile tied to their EIN. And it gives the business owner access to capital without any personal guarantees, separating their personal assets from the business.
I had no idea that type of thing even existed.
Yeah. And I didn't either. And, as I always say, nobody opens a business saying, let me just drive this car right into the ditch.
Right.
They think everything's going to be up and to the right. And 5 years down the road, they're going to be doing $10 million a year in revenue. I wish
we all sure hope so.
Yeah. But something like COVID could happen where your business gets decimated. And that's what happened to me. I had a golf cart company that I bought in 2013. We were doing about $900,000 a year in revenue, grew it up to, when we closed the books on 2019, we were just shy of $2.5 million in revenue. Loved the business, loved my clients, had what I thought was a phenomenal business model. But then COVID threw a nasty curveball at me. I had the largest rental fleet of golf carts in Atlanta, and 90% of our revenue was rentals to all the festivals and events around town.
Wow.
And so the beginning of March 6th, 2020, I'll never forget the date, right as we were ramping up for our busy spring season, in a matter of about 4 hours, I had every festival, event, and summer camp cancel on me. I had a 20,000 square foot warehouse space that I stored the 250 golf carts in. Landlord wasn't willing to work with me. And so unfortunately, I had to bankrupt the company, and I had to file personal bankruptcy as well because I was personal guarantor on an owner-held note, as well as a $250,000 line of credit that I used to add carts to the rental fleet. And so when I stumbled across this, I was like, every business owner needs to take advantage of this, because you never know when there might be something hugely negative that impacts your business. And keep your personal credit, your personal assets intact.
Right. Well, and it doesn't, correct me if I'm wrong, but it doesn't even have to be a negative thing. It could be a need for growth or a need for expansion.
Exactly.
Where you've got to get hands-on capital. And if your PG, personal guarantee, for all of it, there's a limit somewhere. So,
Yeah.
so help us understand as best you can, understanding that obviously circumstances dictate everything, right? How long the business has been there. There's a million factors, but what are some of the major things that are part of securing credit in this fashion?
So on a daily basis, I speak with business owners and they tell me, I already have business credit. I've got a Platinum Amex for business, or I've got a Chase Ink for business. And I asked them, I said, is your name right underneath the company name? They go, yeah. I'm like, check out your Experian report. It's being reported there.
Right.
A huge misconception is people think just because they have that business credit card or they got an auto loan for one of their fleet trucks in the business name, that's still getting reported to the personal credit bureaus. Only about 5% of the financial institutions in America intentionally, and that's the key word, intentionally report a positive payment history to the three business bureaus, Dun Bradstreet, Equifax for Business, and Experian for Business. If you miss a payment, they'll gladly report the negative.
Of course.
And so I've got a platform where we go through, set up the foundation of the business, little things like making sure the current business address matches what's on file with the Secretary of State.
Right.
You have an actual business email. It's not a Gmail account.
Right.
You have an actual physical address that is not your home address. And there's ways to get virtual addresses that appear as if they're a business address. And then one of the things that is mind-boggling to me, a hot button with the business credit bureaus is that the business number is registered with 411.
Really?
When was the last time anybody used 411?
I didn't even know it still existed.
A couple of weeks ago, I was talking to a kid who was like 29, 30 years old. And we were having this discussion about building a business credit for his business. And I told him, 411, and there was this blank stare. I'm like, let me guess, you've never heard of it. And he's like, no. But, and then from there, just lining everything up where we're registered in the business with all three bureaus. Most business owners, probably 99% of business owners I talk to are already registered with Dun & Bradstreet.
Mm-hmm.
But they don't think about registering with Equifax or Experian for business. And the reason that's important to register with all three is then when they go out to apply for credit, be it a corporate credit card, working capital line of credit, fuel card, those financial institutions aren't necessarily reporting to all three bureaus. Some of them might only report to one or two. And then from there, it's just a process of applying for credit, using it responsibly, and going up the steps of the ladder and getting to a point where their business credit score is 80 or higher. Business scores go from 0 to 100.
Thank you for clarifying that, because 80 doesn't sound real impressive on the consumer scale.
Yeah. And so an 80 credit score on the business side of things is the equivalent of having an 800 credit score on the personal.
That makes sense.
And when they cross that threshold of 80 or higher, what's interesting is the amount of credit they have access to has nothing to do with tax returns, nothing to do with P&Ls, balance sheets. It's all based on a multiple of the monthly spend of the business.
Okay.
And they end up getting roughly 10x the monthly spend. And where that can be hugely beneficial for a business owner is they might have a line of credit with Wells Fargo or Truist.
Right.
But in all likelihood, it's going to be a smaller credit limit than what they can get at that 10x multiple.
And so I have a lot of questions. The first one that jumps out is, as you meet a prospective client and talk with them, and you just gave us a list of 4 or 5 different things, as an example, getting listed with 411. If you put $1 million on the table right now, I couldn't tell you how to do that. And I'm a pretty technical guy. So I assume those are things that you help them with.
Yeah.
Because there's no clear direction.
Right. Yeah. We've got our software program is, it's kind of a DIY for the business owner, but the majority of the time I hop on a call and I help them as they're going, as they're getting over each of the hurdles, trying to finish the race. But we've got tutorial videos in there that tell them what they're going to do, point them in the right direction. We've got an AI bot that we coached up with something like 35,000 ebooks.
Oh, wow. Okay.
And so it really, even though it's more of a do-it-yourself program, it's really like a guided tour through the process.
And the answers are there if you need it, it sounds like. So that's great. So the next question that occurs to me, assuming that you've gone through that onboarding package and gotten through things, is it like consumer credit in that you then need some time with payment history?
So the whole process to get to that promised land of 80 or higher takes about 9 to 10 months.
Okay, so not a ridiculous compared to getting financial loans from a bank. It's about the same, depending, right?
It's a lot quicker than building your personal credit because, like, think about it. You're 18, you want to go buy a car, your parents are co-signing, because you have no credit history. Well, it could take 7, 8, even 10 years until you got a 750 or an 800 credit score, because when you're first getting that credit card in your university mailbox, it's probably a $500 credit limit.
Right, because nobody wants to take a chance.
Yeah.
That's actually a really valuable piece of information for people to know, because time to harness it into productive value for you, where you're able to float money that's not directly tied to your PG, is huge. And in the time that you've been doing this, have you had success at are there specific size organizations that are better suited for it? Is what sizes have you worked with as far as just dollar amounts?
I would say the majority of my clients are between the 1 to 10 million revenue range.
Okay.
I've got a couple of outliers. I've got one company that's going through the process right now. They're about 2.5 years old. And last year they did about 450,000 in top line revenue.
Okay.
And then I've got a custom home builder out in Boulder, Colorado. And if anybody's listening, looking at building a home in Boulder, Colorado, check out Sloan Construction. He happens to be my little brother, but he doesn't touch a home for less than $3 million, and his top line revenue is about 40 million a year.
That's fantastic, and it sounds like it's much more about the recurring payment activity than it is about the longevity of the organization. I mean, longevity, I'm sure, doesn't hurt you. Being a 20-year-old company is never a bad thing. But if you've got 10 months of revolving credit history that they see, I imagine that's what they base their initial assessments on. Yeah.
To your point about length in business longevity, I had one client that she's up in Memphis, and she went through the process, started about, I guess, almost 2 years ago. Her LLC has not generated $1 in revenue, has never filed a tax return. She went through the process and put all of her personal expenses on the cards that she was getting for her LLC.
Okay.
Paid for it out of her personal account, but groceries, she's got 3 young kids, and she's now at a point where she's got access to $100,000 line of credit, And her reason for going through that journey is her husband is an EMT. And as I mentioned, they got 3 young kids, and he's like, I want to be present in my kid's life. And hours that an EMT works are brutal.
They are.
And so what they're doing is he's identified a ground guys franchise, just a little landscaping franchise. They're using that $100,000 to pay the upfront franchise fee, purchase a truck and trailer, and lawnmowers, weed whackers, whatever else you need to run a landscaping business, and doing all that without a personal guarantee and able to launch the business faster.
That's amazing. But you also said something that I think is important to draw focus to. Obviously, you don't have to be in the state of Georgia for this to work. Sounds
Correct.
like you do business. Is there any state you don't work in?
I can do business in all 50 states.
That's fantastic, because that's the other piece that a lot of folks that might hear this would be, well, that's great, except I don't live there.
Yeah.
And it sounds to me like the opportunity that you're bringing is game changing on a lot of different levels. Do you have any? That's a great story. Do you have any other stories, without sharing private information, of where this has made a significant difference?
Yeah, I've got another company I've helped. They're a graphic design / swag promo business.
Mm-hmm.
And he's going through the journey of building up his business credit, but he also got an upfront working capital line of credit that has a personal guarantee on it. When he finishes the process of building the business credit, he's going to close out that one and get a working capital line of credit without a PG. But his company, he told me, he said, Darren, I've kind of hit this glass ceiling of about $1.5 million in revenue.
Right.
Growth isn't for a lack of business coming in. I just don't have enough employees to handle the business.
Constrained resources. He can't go higher.
Yeah. And he's like, if I could add 4 or 5 employees, we could take this business to the next level. That's going to be maybe $250,000 in annual salary, but at $1.5 million in top line revenue, the financials don't support bringing on $250,000.
Sure.
And so he's going to float payroll off of the line of credit he's getting, because as he told me, he said, I know if I can add these additional employees, I'm going to see an ROI in 4 to 5 months. And then my forward-looking trajectory is going to be roughly $2.5 million.
Right. So it absolutely makes sense for him.
Yeah.
And that's a great example.
Yeah. And I was having a conversation with a lady a couple of weeks ago. She's a fractional CFO.
Mm-hmm.
And we got into the conversation about debt and how people are afraid to take on debt. And also talking about there's good debt and there's bad debt. Bad debt is just going to buy a motorcycle or a Jeep to drive on the weekends and put it in the business name. Good debt is like the example I just gave you, where they're using it to strategically grow the business.
Right.
And, I've got a pool supply company I'm working with. His impetus for going through the process is he's got an SBA loan on the building that his company's located in. Well, the SBA, they sink their teeth into everything, and they'll put a lien on your house. And he's like, it keeps me up at night knowing I have a lien on my house. And if something were to happen to the business,
it'll cost him everything.
Yeah. And so he's in the process of refinancing the SBA loan into a regular real estate term loan without any personal guarantees. Well, I told him, I said, while you're at it, you ought to get a working capital line of credit. And he's like, well, I don't have any debt. I said, that's great. I'm not telling you to take on debt.
Right.
But think of it as in case of emergency, break glass.
Right.
Because you never know when you're going to have a slowdown. And when you do have a slowdown, you probably needed money 2 weeks ago.
It's an excellent point. I've seen that in real time, because when you realize you need it, it's already too late.
Yeah. And a bank isn't going to want to extend credit to you.
Certainly not when you're 2 weeks past the time you needed the money.
Yeah.
Because there's a whole bunch of implications to that concept of already, the horses are already out of the barn.
Yeah. And it kind of goes back to the old adage, the best time to apply for credit is when you don't need it.
Yeah, absolutely. And it sounds to me like it would be something that, with good financial guidance, would just be a great way to prepare your organization for both positive and negative rapid change.
Yeah.
Because I always like to think on the positive side of it, that rather than you get hit by a bus that you won the lottery, maybe some great business opportunity comes your way. And I've seen this with my own clients, where too good of a business opportunity they couldn't afford to take advantage of, because they didn't have the resources, the capital, the inventory, whatever it was, in order to satisfy the order that came in. And the amount of time it would have taken them to put it together was longer than the buyer was willing to wait.
Right.
So the only other question that jumps to my mind with something like this is what, so obviously reaching out to you, and we'll get the links to publish. What are some things that a business that's hearing this, that has interest, what can they do to get prepared to talk to you?
There's really not a whole lot of prep. As I tell folks, I'm like, look, it's worth 20, 30 minutes of your time. I can show you how the process works, walk you through a demo. And if you don't see value in it at the end of the call, no harm, no foul. We walk away as friends, and maybe you see value in it down the road. But my initial phone call is typically, tell me a little bit about your business, where you are, where you want to be, what's going well, and what are some pain points. And then just kind of let the conversation flow from there. Because as I mentioned, I've been a business owner for 20 plus years. I've always been very passionate about small, medium-sized businesses. And so now I just try to bring all my experience, the home runs and strikeouts, to the table.
Sure. That's a great way to
help a business owner make smart decisions, because as we all know, there's plenty of business owners that are bringing a great product or a great service to market, but they have no idea how to run a business.
Could not agree more, because they're great at what they do, but what they do probably doesn't have much to do with running a business. Whether they're in the trades, whether they're in finance, they're great at what they do, but that doesn't mean they know how to run the business.
Right. And so that's where I just try to help them out, because it pains me to see when a local business goes out of business.
Sure. And the single biggest reason that I've generally seen is lack of capital. I mean, that's it. That ultimately, if you distill it down to the root cause for why they shut the doors, is they couldn't afford to stay open.
Yep. 100%.
And this sounds like a really, really fantastic opportunity for a business to, at the very least, explore if it's an avenue for them.
Yeah. So,
Darren, what's the best way for people to get a hold of you?
My website is darren.trytouring, TRYTURING.AI. And my email is dcrosby, DCROSBY, at tjcorporatecredit.com.
And we'll publish both of those along with the interview, so people didn't get a chance to write it down, they'll be able to click on it and go right from there. Well, I certainly learned a lot today, Darren, and I certainly have some folks that I want to introduce you to, because I think at the very least they owe it to themselves to explore what else is available to them. And without that PG on it, that would probably appeal to most business owners that have been at this for a while.
Yeah.
My guest today has been Darren Crosby. He's the founder of Crosby Business Consultants. His work really focuses on helping business owners think differently about capital access. And I have to tell you, Darren, I learned a lot. I really appreciate your time, and I really hope everybody gives you a call.
No, and thank you again for having me on here.
Absolutely. I do want to remind everybody that today's episode is brought to you in part by the Community Partner Program, the Business Radio X Main Street Warriors, defending capitalism, promoting small business, and supporting our local community. For more information, please go to mainstreetwarriors.org. And a special note of thanks to our title sponsor for the Cherokee chapter of Main Street Warriors, Diesel David Inc. Please go check them out at dieseldavid.com. My name is Joshua Kornitsky. I am a professional implementer of the Entrepreneurial Operating System, known as EOS, and I'm your host here on Cherokee Business Radio. Thanks for joining us. We'll see you next time.